Hello, my friend. Welcome to Charlie Retail Invest. Let's track the latest trend in US economy and share our updated analysis of stock and bond markets. Boeing had a rough week recently as its factory workers went on for a company-wide strike, asking for salary and benefits increase in the coming years. The negotiation between the aircraft manufacturer and the International Association of Machinists and Aerospace Workers, who represents Boeing workers, have broken down completely. On Tuesday, October 8th, Boeing issued a statement saying that the union did not seriously consider their proposal that promised a 30% rise in salary over 4 years, which was lower than the 40% demanded by the union. Instead, the union made non-negotiable demands for in excess of what can be accepted if Boeing were to remain competitive in business. Given that position, Boeing had decided to withdraw from further negotiation with the union, and they also took their original offer off the table. On the other side, the Machinists Union responded that the company was very adamant to the non-negotiated offer and sent the offer content directly to the media on September 23rd. In addition, Boeing refused to propose any wage increases, vacation or sick leave accrual, or the 401k contribution as the negotiation was still ongoing. What's even worse is that Boeing would not reinstate the defined benefit pension. So basically, the two sides are all playing devil cards at this point, which makes the future of the negotiation unclear. According to Yahoo Finance reporters, the last strike in Boeing lasted for 2 months, and starting last week, the employees missed their first paycheck, which makes life way harder in this high inflation environment. They absolutely need the paycheck to pay for the rentals, mortgages, electric bills, and so forth. What's even worse for workers is that Boeing also stripped off healthcare benefits from them, which seems really cruel to me. The strike itself also leads to huge delays in Boeing's manufacturing schedule and would cost Boeing almost $100 million per day during the workout. We can clearly see that the market does not like the news at all, and Boeing stock has tanked significantly this past month by 8.3%. Compared to its peak at $263 per share back in December 2023, Boeing stock has decreased by over 42% in 10 months, making it one of the worst performing stocks in Dow Jones Industrial List in 2024. If we compare Boeing stock to its competitor, Airbus stock, we can see that Airbus has done much better than Boeing in the past year. Although its share also decreased by 30% from its peak price in late March of 2024, Airbus stock price still has over a 6.6% increase in 1 year, whereas Boeing stock was over 20% decreased in 1 year. We know that Boeing has business in both commercial airplane space as well as defense and military sector. Boeing's defense business contributes to around 39% of its entire revenue. Now, if we compare Boeing's stock performance to another leader in military and defense space, Lockheed Martin Corporation, we can see an even larger difference between these two companies. Lockheed Martin, or LMT, just had one of its best performing years and is up by 38% in 1 year due to the conflict in Ukraine and Middle East, in contrast to the negative 20% return from Boeing stock. So clearly something is very wrong with Boeing, and the market has priced in a lot of it. If we look at the history of Boeing's stock price, we can see that similar to Lockheed Martin, Boeing had been doing really well after the 2008 global financial crisis, and its stock price increased from $42 per share back in 2009 to a high of over $360 per share in 2018. That's over 700% increase in 9 years, which is comparable, if not better, than the growth of blue-chip tech stocks like Microsoft or Apple. However, things went south from October 29, 2018, when Lion Air Flight 610, a Boeing 7387 MAX plane, crashed into the Java Sea near Indonesia in Southeast Asia. 181 passengers, along with 8 crew members, were killed by the accident. The subsequent investigation, led by the National Transportation Safety Committee, revealed that a software function called the Maneuvering Characteristics Augmentation System, or MCS, caused the aircraft to nose down. An MCAS function had been intentionally omitted by Boeing from the aircraft documentation for aircrews, so the Lion Air pilots didn't know it was there in the first place, much less how to operate the plane when the MCAS system was activated and executed by the computer system of the plane. After the accident, FAA and Boeing issued training advisories to all operators of the Boeing 7387 MAX series, and Boeing claimed that a software update would be made available to update the behavior of MCAS. Boeing stock had held up quite well a few months after the Lion Air flight crash, as the market tended to believe that the accident was not indicative of the inherent quality issue of the Boeing 737 MAX plane. Unfortunately, less than 5 months later from the Lion Air flight crash, on March 10, 2019, a second airplane crash happened with the Boeing 737 MAX plane, and this time it was the Ethiopian airplane Flight 302 in Africa. Just 2 minutes after the takeoff, the plane's MCAS system activated by itself, pitching the plane into a dive toward the ground, killing 157 people on board instantly. The second crash put a nail in the coffin, leading to a 2-year worldwide grounding of Boeing 737 MAX series, and Boeing stock really started to tank afterwards. The decline continued as the COVID pandemic hit in early 2020, and Boeing stock stuck in between $120 to $250 per share since then, which is way less than even half of its peak value back in 2019. Now back to 2024, Boeing still has had several minor incidents happening, and the public have an overall negative view towards its product quality now, as they witness Boeing's planes having so many ongoing issues. On January 5th of this year, Alaska Airlines Flight 1282, which is a Boeing 737 MAX 9 plane, climbed to 16,000 feet after taking off in Oregon, and its rear door plug was violently expelled from the plane with over 170 passengers on board. A big hole of about 1 person size was created as the door fell off the plane in the sky. Luckily, no one was seriously injured in this incident. Further investigation, along with reports from multiple other airlines, revealed that there are excessive amounts of defects from the parts provided by Boeing suppliers, which makes the plane quite unsafe, and people just feel scared when flying with a Boeing 737 MAX plane. So the question becomes, what is the future of Boeing? Will it recover from multi-year setbacks originated from its poor product quality and regain confidence from passengers as well as investors? Or will it continue to decline down the road and ultimately get bought cheaply by another company? Thus, Boeing that we know of will no longer exist. Well, that's a very difficult question to answer at the moment. But as outsiders, we can't even predict its future as we don't have insider information about how Boeing operates internally. However, We do believe that Boeing has a long way to go to prove that it can be competitive in staying in airplane manufacturing business and provide net profits in the long run. If we look at the revenue and net profit history of Boeing for the past 10 years, we can see that its net profit was actually increasing from 2014 to 2018, and things got completely reversed in 2019 due to the global ban of 737 MAX series, and its net profit turned to a negative loss in that year, which coincided with the onset of its stock price collapse. As COVID hit in 2020, Boeing's net loss became even larger, and its stock price plummeted to below $100 at one time. Since then, we can see Boeing has been trying hard to reduce its operational costs and reduce its net loss from 2021 to 2023. And things are improving slowly from its financial reports. If we zoom in to investigate its financial performance from March 2022 to June 2024, we can see that Boeing's net loss had been going down slowly, although it's a choppy road ahead. Boeing's revenue rose at an annual rate of 10.3% from $58 billion in 2020 to $77 billion in 2023, as there is massive demand for new aircraft with a rise in global travel post-pandemic. And it's up to Boeing to see if it can seize this opportunity and expand its growth in revenue. The company saw a rise in airplane deliveries from 340 jets in 2021 to 528 jets in 2023. However, the company has struggled to ramp up its production, which has severely impacted its deliveries. All sorts of issues, including supply chain disruption, the strike and labor issues that we just talked about, and the FAA regulations, further added to its disadvantages. Deliveries over the past 5 years have been way lower than the 806 airplanes the company delivered back in 2018. The under-delivery of jets will lead to a decline in Boeing's plane sales numbers as well. Experts estimate that we may see around 8 to 9% decline in sales in 2024 and early 2025, which could potentially bring Boeing's stock price down to $120 per share in Q4 of 2024. So in the next 2 to 3 months, we might see Boeing stock tumble below $150 per share, and it may even touch a low of $120 to $130 per share. If that happens, we do believe that it might be worth buying some Boeing stocks around $120 to $130 per share price tag, because that's like a bottom price level for such a large company. In the future, we're talking about 6 to 9 months from now, we might see Boeing's earnings look much better than today, and a price tag of $200 per share is quite realistic. So essentially, Boeing would be a good choice for medium to long-term investors, as we can see a potential 30% growth from its stock price from its current level, which is actually very cheap compared to defense stocks like Lockheed Martin and Raytheon. We will keep monitoring its progress and share with you any news of Boeing in the future. And that's the whole story of today's video. If you are a retail investor like myself and would like to know more about the US economy updates and our most recent trading activities, please give us a thumb up, share this video, and consider subscribing our channel, Charlie Retail Invest. We really appreciate your support. You're also more than welcome to leave your thoughts on the stock market and our economy in the comment section below. Thank you so much for your time, and I'll see you in the next video. Please take care.